Good morning. My name's James Igoe from Redmayne Bentley. I'm an investment manager with the business. We are an investment and wealth management company. Today we're going to be talking about ISAs, predominantly stocks and shares ISAs. I'm delighted to be joined by Tess Williams, who is our Head of Financial Planning. Morning, Tess.
Morning.
So ISAs are a term often used, sometimes misunderstood. So we want to unravel that a little bit where we can today. Let's start with you, Tess. Can you tell us a little bit more about yourself, your role within the business, if you don't mind?
I'm a mum, a wife, a friend and a financial planner. My role here as Head of Financial Planning at Redmayne Bentley was to set up, launch and now oversee our financial planning service for our clients and our advisors. So we've got a cracking team here at Redmayne Bentley. They're all absolutely focused on giving our clients the best advice that they can, whether it's something complex such as long-term care planning or inheritance tax mitigation or accumulating funds towards your retirement or making them last as long as possible during retirement, or something relatively straightforward such as using your tax efficient allowances such as ISAs. For me personally, I've been advising clients or training people to advise clients for probably about a quarter of a century now.
That's great, thank you, Tess. So I guess good context here would be to talk a little bit about how financial planning and investment management work together. If you could expand on that a little bit, that'd be really good.
Yeah, of course, and it's really something that's very good here at Redmayne Bentley. So it works very much. They dovetail together. So as a financial planner, we look at the tax allowances, we look at the investment structures that are available to somebody to help them keep as much of their wealth as they can. So the investment manager keeps their ear to the ground. They keep their eye on the markets, they read all the news about the companies that they're investing in, they make decisions about strategically how to balance that portfolio, whether it's for a client who wants income on a set level of income, whether it's a client who needs growth or a mixture of the two for those clients. Yeah,
that's good. Thanks, Tess. So I guess a suitable starting point for kind of the ISA conversation is like, what is an ISA? So the acronym is Individual Savings Account, and the ISA can come in a range of different forms, but we'll just talk about stocks and shares ISAs for now. So stocks and shares ISAs have the ability to shelter the pot of money that's within it from capital gains tax or income tax. And the general idea is over time, if you can build up a series of stocks and shares ISAs using this example, you can continue to benefit from these protections that are in place. So you don't pay capital gains tax over time, you don't pay income tax over time. Obviously, all tax regulation is and may be subject to change in the future. We can't guarantee anything, but as we sit here today, that's certainly some of the benefits we'd be talking to people about in terms of ISAs. Anything I've missed, Tess?
So I think you've summed that up well. There are lots of different types of ISAs out there, and that's where it can start to get confusing for people. So you've got your stocks and shares ISA, you've got your cash ISA, you've got your innovative finance ISA, you've got your help to buy ISA, there's a lifetime ISA, and there's a junior ISA or a JISA. But in reality, breaking them down is actually quite simple. So your help to buy ISA, you can't get anymore. An innovative finance ISA is a tax wrapper for savings income from peer-to-peer loan agreements. And the rest of them can be broken down really by age. So junior ISAs or JISAs are from birth to 18. Lifetime ISAs start from between 18 and 39. Cash ISAs can be taken from 16. Stocks and shares ISAs from 18. And then there's some differences in how much you can pay in. So junior ISAs, it's £9,000 per year. For stocks and shares, cash ISAs, and your lifetime ISA, it's a maximum of £20,000 per annum overall, with a maximum of £4,000 in your lifetime ISA. But how you split that up is entirely up to you. Believe it or not, it's simple really. The next difference between them is how the money's invested. And it's helpful that some of them do what they say. So a stocks and shares ISA is for investments that are risk-based. A cash ISA is more for savings accounts, deposit-based investments. And for the rest, you can choose how you split it and how you invest it. And then time horizon comes into it. So stocks and shares ISA will be more considered for medium to long-term investments, whereas a cash ISA will be for money that you can't afford to lose or for your shorter-term investments. And it's worth mentioning that capital values can change with a stocks and shares ISA and that you may get back less than you've paid in. So what would be interesting to hear about, James, is where does Redmayne Bentley fit into this ISA world?
Yeah, so a good question. From our side of things as investment managers, lots of clients tend to have stocks and shares ISAs. And in really simple terms, you can put whatever you want into a stocks and shares ISA as long as it exists on a regulated market. So if you wanted to invest your annual allowance of £20,000 into shares of Disney or Ferrari or Apple or NatWest, whatever took your fancy, of course, you're at liberty to do that. We also offer the service where we can invest on behalf of other people and where they'll come to us and ask for our recommendations. And the general goal, as we've touched on, is if you can build these up sensibly over time and you can allocate £20,000 a year within your tax year, build them up, you're not paying tax, they're rolling up free of tax, and hopefully the benefit over time is that they can grow and they can be part of that nest egg solution that you've talked about, Tess. It's also important to say that the tax treatment of any investment like an ISA is specific to an individual's circumstances and may be subject to change in the future. Tess, I guess I'm interested from the financial planning side. Are there ISA related questions that commonly come into you?
Yes, so one common question we get asked is a misconception that ISAs are more risky than other investments. And the short answer to that is that they're not. So an ISA is a tax wrapper around an investment. What you put inside it depends upon your personal level of risk, your preference. So you can have anything from cash to high risk investments. It is worth mentioning though that we do always recommend people seek specific advice from a qualified professional because guidance dependent upon your individual circumstances may be different. And it's also worthwhile mentioning again that investments can go down as well as up, and so you may get back less than you've paid in.
Tess, that's been brilliant. Thank you so much for your time today, and see you again soon.